Welcome to the Riskwiser Zone. I'm your host, Louis. As we navigate the ever-changing landscape of global markets, it's essential to stay informed and adapt to the shifting tides. Today, we're focusing on the ongoing conflict in the Middle East and its far-reaching implications for investors. The situation in the region has sparked concerns about inflation, and as a result, rate cut odds have weakened. This has led to a selling opportunity in June U.S. Treasury note futures, with prices trending lower and hitting contract lows. Our technical analysis suggests that the moving average convergence-divergence indicator is in a bearish posture, giving the bears a firm near-term technical advantage. Fundamentally, the war has stoked global inflation concerns, prompting a Federal Reserve official to favor keeping U.S. interest rates steady. The poorly received Treasury auction of two-year notes on Tuesday also suggests rising bond yields, which is bearish for U.S. Treasuries. A move in June T-note futures below chart support at 110.16.0 could become a selling opportunity, with a potential downside price objective of 108.10.0 or lower. Meanwhile, the conflict has also led to a surge in oil prices, which could have significant implications for the global economy. As investors, it's crucial to stay vigilant and adjust our strategies accordingly. We'll be keeping a close eye on developments in the Middle East and their impact on markets around the world. In other news, the Trump administration has announced that there are strong signs of a potential deal with Iran, which could lead to a ceasefire. However, Tehran has dismissed the proposal, and it remains to be seen how this will play out. We'll continue to monitor the situation and provide updates as more information becomes available. As we take a break, remember that trading commodity futures and options is not for everyone. It's a volatile, complex, and risky business, and it's essential to understand your exposure to risk and other aspects of trading before making any decisions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of finance and economics for our middle segment today. Let's take a closer look at what's been happening in the markets. We have three key stories that caught our attention. Firstly, a group of 18 companies from the BSE 500 index have reported robust revenue growth, with some even posting profits. This is certainly a positive sign, but it's essential to consider the broader market context and not get too carried away with individual success stories. On the other hand, we're seeing Indian government bond yields coming under pressure due to a record weekly supply of state debt. The benchmark 10-year yield has been rising steadily, tracking elevated crude oil prices and heightened geopolitical risks linked to the West Asia conflict. This significant issuance could lead to a crowding out effect, pushing the 10-year benchmark yield towards 6.90%, 6.95%. Meanwhile, MSMEs and small businesses are feeling the pinch as they struggle to cope with rising input costs and working capital requirements. Many are being forced to tap into their working capital loans, which can have long-term implications for their financial health. It's crucial to strike a balance between optimism and caution when analyzing these stories. While there are certainly positive signs, we must also acknowledge the challenges that lie ahead. As investors and market participants, it's essential to stay informed and adapt to the ever-changing landscape. The intersection of economic growth, government debt, and small business resilience is complex and multifaceted. As we navigate these complexities, it's vital to prioritize prudence and risk management. Welcome back to the Riskwiser Zone. As we wrap up today's show, we're taking a closer look at two separate but intriguing stories that highlight the complexities of international relations and diplomacy. Firstly, we have King Charles III's planned state visit to the United States, which has been met with opposition from some quarters due to the ongoing Middle East conflict. Despite this, Washington's envoy to the UK, Warren Stevens, believes it would be a big mistake to cancel the trip. The U.S. ambassador expressed confidence that the visit will go ahead and be a meaningful one for King Charles. On the other hand, we also saw a significant development in relations between the UK and Nigeria, with Nigerian President Bola Tinubu meeting British Prime Minister Keir Starmer to discuss economic cooperation and security issues. This meeting underscores the importance of building strong diplomatic ties between nations, especially in today's evolving global landscape. It's essential to approach these stories with a nuanced perspective, recognizing that international relations involve multiple stakeholders and complex interests. As investors, it's crucial to stay informed about such developments, as they can have far-reaching implications for global markets and economies. In conclusion, whether it's the UK's royal family navigating diplomatic visits or world leaders engaging in high-stakes discussions, one thing is clear. In today's interconnected world, every move has the potential to send ripples across the globe. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.